In this presentation, we will complete a bank reconciliation after having entered data from a bank statement directly into the check register within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our guitar lessons and equipment file. We've entered the data into the check register. Let's take a look at that real quick. We're going to go to the accounting on the left side. We've been entering the information into our checking account, into the register, into this item here. We've entered basically all the data directly into this register, and now we're going to take this information and reconcile that information to the bank statement. So here's the bank statement that we had. And now I've taken away all the highlighting because we're going to highlight it again. So it's nice to have a couple copies or just be able to delete the highlighting. Or if you mess up or something, you have to use different highlighters. If it's a paper copy, then that's good too. We know that the beginning balance is what it was last time. And we've entered directly the additions and the subtractions. And therefore we should, if everything was perfect, be at 40,209. We're not. And therefore, so if I go back here, we could see that's not the case clearly. We could go into the register and try to tick and tie everything out, which is in essence a bank reconciliation in this case. However, it would be easier, of course, to use the reconciliation process. Again, note that the reconciliation is not the same as it would be under a full service bookkeeping, because this number here would surely not be the same as this number, or almost surely, if we were doing the full service bookkeeping, because there would be outstanding items being checks that we have written that haven't cleared the bank. They would be in our QuickBooks system correctly, but not in the bank because the bank hasn't cleared them. Whoever got the check hasn't cashed the check yet. So in this system, of course, we're weighted. We have a lag, and we're depending completely on the bank. So we're having a different kind of system. All we're doing is really verifying within the bank reconciliation that we entered this information directly into the system correctly. So when we reconcile after February, we are verifying that the beginning balance was right. So something was right up until then, meaning January was right, and that the additions and subtractions were entered directly from the statement into our system exactly as they appear here. No duplicates, no missing information, no miskeys of amounts. That's different than a normal bank reconciliation, but still necessary. Even if we had this number be perfect, we'd still do the bank rec. It would just be a really easy thing to do. So we might as well do it. So that's what we're going to do now. We're going to do the bank reconciliation. To do that, we're going to go back to our accounting. And then in the chart of accounts tab, we want to be in the reconcile tab. We'll then go to the reconcile tab. Here's our reconciling information. We will be reconciling the checking account. That's typically the account that we will reconcile as opposed to these other accounts here. And then we're going to say the beginning balance is 36,203. This is the main difference because this number then will tie out to our bank statement. So that number, I could check it off right now. That's done. So that's done. And once I enter these two exactly, we should be at the end and it must work. So that part is there. And now the ending balance is 40,209. So we need to enter that. 40209. That's going to be what we are looking for. And the ending date is going to be the end of February. So we want the end of February. And that's what we're going to look for. We're not going to enter any data for the service charge because we entered that directly into the system. These are kind of helping us out if we didn't enter it into the register, but we entered it into the register. And I think that's an easier way to do it. I don't typically use these because I'd rather enter it directly into the register and be able to see these clearly and check them off as we go. So this is all I typically will use. Then we're going to go ahead and start the reconciliation. We saw this last time. Now it's a little bit different in terms of the data, but we see that this difference column is really what we're looking for. That difference, of course, is these two items. So the difference should be the increases of 18215 minus the decreases of 14209. That's the 4006. That's going to be our difference, the 4006. In other words, if we check off all the detail related to these items, then the difference should go down to 0, and that's when we know we're good. So if we go back over here, note, however, that if this difference is anything, then we have a problem. So it has to be 0, because if it's anything but 0, it could be multiple things that could be causing the problems. In other words, this isn't going to go systematically down to 0 as we check things off. It's going to go up and down But when it hits 0 exactly, then we have good assurance that we've done what we need to do here. All right, so then we're going to have payments and deposits. We're on all right now, so remember it's sorted by date. We can also sort by type if we want, or reference number. It could be helpful depending on how that information is shown on the bank statement, but typically date is best, and I find it to be easiest to check off one of these at a time. Now note again, if the ending balance was perfect and everything, we entered the data perfectly, then we could just go over here and we could just check this off and just check this item and say check it all off. We want to, select all of it, and that would be it. The ending balance would go down to 0, and we would be done. And that would mean that we entered all this data in exactly as it appears here. Of course, that's not the case for us because we did that on purpose, at least somewhat, so that we can enter this data, and this is how the reconciliation goes. So I'm going to uncheck that, and we're going to go to the deposits first. Those are usually easier. And then we'll go through this a little bit quicker because we've seen this before, and we'll just check these off one by one. We'll just check these off. So we're going to go back over here. We're going to say this is the 1980. I saw that, so I'm going to check it off. There's the 1980. We're going to go back and notice, remember, we're going from here to the statement. This is the driving document. This, of course, is the one that's correct because by definition, we're entering the information from here into our system. Again, that's not how we would do it typically, possibly, but that's how we normally do it. And even if we did full service bookkeeping, anything that's on the bank statement usually is going to be right. And if our books are different, we're probably going to have to fix them unless there's an error on the bank statement. But more commonly, there's going to be stuff on our bank statement that aren't on our books that aren't on the bank statement, and those would be the uncleared checks. Not an issue here because we don't have any uncleared checks. Okay, so we're going to say 1340. So here's the 1340. That's good. So we'll highlight that. We're going to see if we do a few of these at a time. So we've got the 910, 1670, 944. There's the 910, 1670, 944. So that looks good. Now we have a duplicate here. Something looks funny there. So we saw these three. We'll highlight those. Done, done, and done. Now we've got 1870 and 1634. That 1870 looks like there's a problem. That number looks wrong. So notice how easy it is to catch here. We're saying, okay, that should be on 214. This one is on 214, but the amount's wrong. So I'm going to just go, all right, well, that amount we need to double click on it. We need to make that to be 1870 and then save it. So that's easier to do here really than in the register. And then we can say, all right, there's the 1870 and there's the 1870. So that looks good. So let's do a few of these. We're going to say 1634, 1277, 1980. So there's the 1634, 1277, 1980. Those look good. So we'll highlight those. There's that one. There's that one. There's that one. And see if we could finish this off with one thing here. 1340, 1570, 1700. 1340, 1570, 1700. Those look good. So we'll say that one's done, done, and done. Except for that 0. That 0 is done too, but I'm not going to highlight it. And then we're going to go to the other side and say now we've got the deposit. Now we'll go to the payments. We have a little bit more information with the check number, but really we're really concentrated on the amount. And if it's in order by date, it's going to be the exact same order. So we really are basically usually focused over here on the amounts. And if the dates are wrong, if it's in the same month, we should be okay. If the check numbers are nice, we want to have the check numbers clearly to be correct. So it'd be best to double check those items. But again, the check numbers don't provide the same level of internal control as they would if it was full service bookkeeping. So just, be aware of that as well. We're really looking at the amount and having the proper expense accounts as we enter this information. And this item is really checking that the amounts have been entered. That's our major goal that we're going to have done here. So we got the 520. So let's do a few. 520, 944, 120. 520, 944, 120. Those look good. So I'm going to highlight those. 970, 16, 1030. 970, 16, 1030. Those look good. So 970, those, I'm just going to highlight those. And then we've got the 1500, the 410, the 598, 1500, 410, the 598. Those look good. So we'll highlight those, right click, highlight 300, the 1598, and the, let's do those two. 300 and 1598. Those look good. All right. And then the 3539 and the 630. So here's the 3539, the 630. Looks good on those. And then we've got the 300 and the 150. So they're out of order. That's okay. They're both on the 28th. And that's because there's no check number. Notice it's by date and then check number. So there's no check number. So then it defaulted to probably the account as the next thing that's in order. That's why it's out of order, I would think. So then we have those two. And then if you get this last one, notice it's off by 300 and you're like, woo, we're going to get that. It's done. Back down to 0. So now we've got it all in there perfectly. This is the statement balance. This is the cleared balance that we just checked off, and everything we entered in the system is cleared. Notice that if you have anything here that's not checked off, that means that we entered in something twice in the system somehow, because we entered everything directly from the bank statement and we didn't need to delete one of the duplicate transactions typically. So that's good. We're just going to say that's it, and we can finish that. That gives us our verification, so we're going to say done. It doesn't give us a report right afterwards because the report doesn't show anything. It's going to be the same. If you want to run the report, however, we go to the reports over here, and the reason it doesn't show anything is because there's no difference. There's no outstanding items. Now, it's what we've done is now make our ending balance be the same as what's in the what's on the bank statement. In other words, let's do this first. If we go to accounting on the left and we go to the chart of accounts, and we see now we're at 40,209. That's what's in our system, and that is what's on the books. So there's no reconciling. There's no outstanding items. There's no us saying, hey, this is different than what's in the books, because it's justified because there's these outstanding checks that have been written that have not yet cleared. We don't need to do that because we're not entering the checks that we've written that haven't cleared yet. So whatever checks have been written that haven't been cleared, we're not going to enter those into the system at all until they clear. So we're completely dependent in this system on the bank statement. So if we were to look at the report, then we could go to reports, and we would go to the reconciling report, reconciling reports. So this one, reconciling reports. And now we've got our two reconciling reports. We're looking at February. If we review the report, here's the report. Now, it's got a lot of information. It looks like, wow, that's pretty, and we could give this to the client and print it out, and if someone wants the reconciling report, we can give this, but it doesn't give any more detail other than to say, hey, look, we're entering the data exactly as it's on the bank statement. And that's what someone should be able to see by looking at this. They're going to say, oh, that's the statement balance. That's on the balance sheet in the register. And, oh, I'm sorry, this is the statement balance. That's on this bank statement, the bank statement. And this is the register balance, what's in our register on the balance sheet, and they're the same number. So there's no difference. So that's good, and we can just check that off, no problem. It is what it is. And it means that we're basically probably not recording the outstanding items, but being completely dependent on the bank waiting until these things clear before recording them at all. For more accounting information and accounting courses, visit our website at accountinginstruction.info.